Hey guys, Joel Frank here, market analyst for YouTrading. In today's video, I'm going to be giving you a quick market update. We're going to be looking across the asset classes and talking about what risk events we've got coming out later this week and how things might shake out. So let's start off by looking at currency markets here, or at least looking at the dollar index, which sort of tracks a lot of the major pairs like euro dollar, cable, and dollar yen. And you can see that things have been pretty range bound, like the dollar's basically stabilized above its 200-day moving average with the Dixie around 106. In fact, if I just show you the, euro dollar, you can see stabilizing here around its 200-day moving average, and sterling stabilizing just below it, and dollar yen still a little way above it, which is a sign to me that there could be further room to fall here in dollar yen. But anyway, let's go back to the Dixie because a couple of things are interesting me here. We look to be forming what I think could be a descending triangle, which typically is bearish, or it's a bearish technical pattern. So if we continue to consolidate within this pattern in the coming days, that could trigger a break lower. We'll talk about some of the fundamental events we've got coming up today and for the rest of the week that could trigger such a move in a minute. But let me just quickly show you what's going on in some other asset classes like stocks. Tested their 200-day moving average last week, failed to get above it. So we're sort of stabilizing within recent ranges at the moment. We're sort of swinging either side of the 4,000 level. And this range I was talking about last week, where you got sort of 3,920 and then 3,950 or 40 to the upside, remains in play for now. Although if you do get the conditions which could trigger a bearish dollar breakout, I'm thinking you could probably get the conditions, and we'll talk about the fundamentals in a second, that could see stocks pushing back towards these highs or potentially even above. And remember, December's usually a pretty good month. Like, they talk about that Santa rally. So maybe we could be in for a bit of upside in the future. Finally, just look here at oil, which is recovering a little bit after hitting fresh annual lows at the start of the week. Now back above 80 for US or front month US WTI futures. In terms of updates, news that we've had this week, remember there was a lot of focus on China, with a lot of things happening on multiple fronts there. Like you've got the rapid increase of coronavirus infections, which has re-triggered a bunch of lockdowns, which has then triggered quite a lot of civil unrest, or an unusually large amount for China anyway, which seems to be pushing authorities towards considering easing their zero COVID stance, which, by the way, actually, if we just return to oil, this has been supporting the oil market in the last couple of days, and massively it's been supporting Asian equities as well. The idea that China might be moving away, or might soon move away from the zero COVID stance, which has been so bad for growth there, although has arguably protected a lot of lives there. But the tone from authorities there has been shifting as they talk more about vaccinations and in vulnerable groups and stuff. So we're gonna have to wait to see what happens in China and how much it can boost oil. But in terms of what else we've had this week, we've also had some important inflation data out of the Eurozone, downside surprise. Australia as well, downside surprise. And this comes after the big downside surprise we had earlier this month out of the US. So things very much in fitting with the peak inflation narrative for now. But currencies and stocks, like we were talking about, within recent ranges still, because we've got a few key events coming up. We've got a lot of US labor market data, JOLTS, which is the number of job openings at the end of October. ADP, which is like a preliminary, actually that just came out a little bit weaker than expected, but it's sort of like a preliminary estimate of the NFP number, but recently it hasn't been that good of a gauge as to what the NFP number is going to be, but still weaker than expected. 127k expectations was for ADP's estimate to show 196,000 job gains in November. So maybe some people will be thinking that we could get a downside miss on Friday. Powell coming up on Wednesday as well, and then US ISM manufacturing PMI coming up, and then you can see here we've got Bank of Japan governor, RBA governor, ECB president all speaking, RBNZ governor. So plenty of central bank speak coming up, but the main honcho is Powell, who most people expect he's still going to sound hawkish in that he's going to say, listen, we've still got a lot of rate hikes to go. We still don't know how things are going to go with inflation. But given that inflation has, like I was just saying, globally, not just in the US, showed signs of peaking, and given what other Fed members have been saying about slowing the pace of interest rate hikes ahead, Powell is likely to confirm that in December there's going to be a smaller interest rate hike from the Fed of 50 basis points. And that's been sort of contributing to the idea that peak Fed hawkishness has been and gone. And, you know, if this data this week does point to a softening US labor market and this ISM manufacturing PMI data points to a softening US economy, then that could further support that idea of peak Fed hawkishness, which could be, I think, the conditions we need to support a fresh leg lower in December. What's going on here? In the US dollar, this break that I'm talking about, and could support this rally in stocks that I've been talking about. But anyway, let's see how things shake out, guys. Hope you all enjoyed the video, and I will see you all in the next one.